Good morning. Good morning. It looks like everything is copacetic. We're all good. My name is Greg. I'm the marketing manager for Metastock. I'm coming at you from our satellite studio deep in southern Texas, where today is going to be a balmy 89 degrees. 89 degrees. I'm pretty sure in Utah right now, where Bobby is, who is hosting this event, it's probably about 35 degrees. 50 best. 89 degrees. Okay, this is Metastock, and we are excited that you're here for our live event. Today is Zaheer Anwari, and he's going to be talking about trading the NSE, which is the the National Stock Exchange of India. It turns out there's a lot of people trading the NSE, and if you're interested in trading the NSE and more about the NSE and just trading in general, today's a great day to watch. We'll be starting in about 7 minutes. In the meantime, I'm going to go ahead and play a little video. So if you're not familiar with Metastock, you can familiarize yourself with Metastock. Hoping I push the right button. Here we go. Cross fingers.
Hi there. Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
All right, hope you enjoyed that little video. Let's see, we got people here you're not being particularly chatty, go ahead and say hello. I see that Vincenzo from Italy is here. Ciao, Vincenzo. Go ahead and shout out and let us know who you are and where you come from. We do encourage vigorous interaction here in chat on our webinars and our live events. We just ask that you be polite and respectful. You don't have to be especially nice, just don't be mean. A couple things I'm trying to think of. Oh, so you probably can't tell, but playing behind me right now on my television is a recording of last week's 6-day Traders Conference. If you missed that, I'm sorry, because it was awesome, but you can see every single minute of it. It was all recorded, and you can go to youtube.com/Metastock and select the playlist and watch it at your leisure. Also, there are some extremely great offers that came along with that, and if you registered, you've received emails to that effect, so make sure to take advantage of that. Speaking of really great offers, if you stick around to the end of this discussion, I know that Zaheer has a great add-on for Metastock that he wants to share with you, and I know he'll do a great offer. They usually do for these webinars. That's one great reason to come to these live events. So if you haven't yet liked or subscribed, wow, how good of a segue was that? If you haven't yet liked and subscribed, go ahead and do so. We have live events like the one today just about every week, at least once a week. And then about once a quarter, we have multi-live events like the one last week, which is 5 or 6 days. And then about once a month, we have a full day event. It's all free, and it's all just people talking about trading, people who are really excited about trading. All right, we're going to be starting here in about 1 minute. I can't think of anything else I have to tell you. No. I'll let you listen to some jazzy music, and we'll be right back. Thanks so much for joining us, and successful trading. Don't go away.
The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, thanks for joining us this morning. I'm Bobby Hiller here with Metastock, and we have Zaheer Anwari who's going to be speaking with us today about how you can find and invest and hold some of the best performing stocks from the NSE, and we're really happy to be having him come on. He is running just a couple of moments behind, I think, but I just got off the phone with him, and he should be on any minute now. So if you guys just want to hang out with me for just a moment while we wait for him, it should be really any moment. And I guess we can go through the fun stuff, the legal disclaimer while we wait here. So today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Metastock does not endorse the purchase of any security, nor is it paid for the promotion of any security. No information contained in this presentation should be construed as investment advice or a solicitation to buy any security. All right. So now that we've got that out of the way, I guess I can give a little bit more of an introduction here to Zaheer. He has spoken with us many times before, and he always does such a fantastic job. So we're actually really excited to have him on. Let me see if I can actually get his site pulled up for you guys to show you a little bit more about him. And also work closely with Kola, one of his partners too. And I know they've been in the investment realm for a really long time now. And they are both kind of owners of Sublime Trading .io. I believe I have this showing. Okay, yep, I'm also looking at YouTube over here. I guess I should say as well, if anyone has any questions throughout the day, please feel free to kind of chime in. I will be monitoring YouTube as well as GoToWebinar with you guys. And I also have Greg on backup with us too.
Well, Bobby, so I was going to say, I see that Zaheer hasn't yet come on. If you want to go offline for a second, and or maybe mute yourself and just try to get him on the cell phone. Did you get a? Oh wait, now he's coming on.
Yeah,
now
I
he's coming
just
on.
got off the phone with him as you were giving me the countdown. That's like when you're doing that. I gave you the sideways thumb. I was like,
I'm sorry, I can't. I did. See, I'm not down with you kids in your street signs. I don't know what side thumb means.
Oh, hi Zaheer, we can hear you.
Listen, apologies. I had it down for 3:30 my time. The calendar just got it all messed up. Apologies.
That's totally fine. We had our calendar kind of messed up at one point too, but
yeah, we never make mistakes. Here's Zaheer. I'm offended that you didn't get that right, because we always get it right. Hey, I'm gonna let you guys go.
I'm literally. If you could just give me 1 second, I'm just getting my slides ready.
Yeah, definitely. I just said hello so far and kind of did the disclaimer and gave you a brief introduction, and then you jumped in. So.
Okay, Bobby. While he's getting that ready, I have a quiz for you. How well do you know Zaheer? How well do you know Zaheer Anwari? What was his past profession? One of his past professions.
He was a photographer.
Oh, that was good. Very well.
Primarily in like the marketing realm. Yes.
Yeah.
Also know he's a wee bit of a chess wizard, if I'm not mistaken.
Yeah, I was.
I was gonna say we have a lot in common, but we don't. If he plays chess, I have nothing in common. Let's see here. But I was a former photographer as well, and also it seems like every time Zaheer, excuse me, goes through his background, I think, oh, I did that, and I think of things we have in common. That's why it always sticks out in my mind. How's that?
Yeah, I can see it.
Okay. All right. I'm going to go ahead and get out of the way and break a leg to both of you. Or do we need to give you a little more time? Zaheer, I see you're still not quite.
I just take a moment. 1 minute.
Okay.
Yeah, I see some people are saying hello and chiming in from India. I'm sure we probably have a lot of you from there today. Considering the topic here, we will be talking about the NSE. Someone asked how they could listen or understand in Hindi. And that question came from YouTube. So I would mention, if you're on YouTube, you can turn on subtitles and you can have the subtitles automatically translate for you. So the demonstration today will be in English, but you can turn on subtitles in any language of your choice. And if you wanted to do that, you'll have to do that from YouTube. So if you're joining us in GoToWebinar and you want to have that option, you can simply go to youtube.com/Metastock, and that's going to allow you to see our live video that's kind of just right up at the top of the page right now, and you can join in there and watch from there. Or of course, you guys are also welcome to watch in GoToWebinar as well. It just, I don't believe that it has the translation feature.
I don't think GoToWebinar has that translation feature. And one caveat about the translation feature is it works great, unless on the long format things we do that are day long, it unfortunately doesn't work once the videos get longer. But for this today, it should work. I've never actually tried it myself, but a lot of people tell us that it works in multiple languages. So, okay, another pop quiz hotshot. What does NSE stand for?
I want to say
I had to look it up this morning.
Stock Exchange. I do know this.
Yeah, that's right. It is. Because I was thinking, what is NSE in India? It's National Stock Exchange of India. And if I'm honest, when I hear NSE, I know it's India, but I didn't know what it meant until this morning when I looked it up. So
yeah. Okay. So I did have it right, but then when I said it out loud, I was like, "Where's the India part?" But it's on the end there.
Technically, it's the NSEI. I don't know why they left the I off, but. I have to say I don't know much more about how much it's traded, but obviously considering the population of India I can tell you right now that I don't think our boss would mind me mentioning a very large portion of our customers are from India. So there's apparently a very large interest in trading from India generally, and I'm sure that's why I'm sure Zaheer. I'm sorry, I keep on getting his name wrong. Has picked up on that.
Okay.
All right.
Perfect. Yeah, I'm going to go ahead and pass over to make you the presenter here.
And I'm going to say goodbye. Good luck, gentlemen. Break a leg.
Thanks, Craig.
Let me do a cleaner version. Yeah, there we go.
Okay, great. Yeah, so I can see your screen. Sublime Trading and Metastock, Market Advantage Toolkit. Looks good. I will go ahead and get my face and voice out of your way here.
Fantastic. I think when I switch across, you can see my Metastock okay, right?
Oh, Bobby.
Yes, I see it just fine.
Okay, brilliant. Okay, hi guys. Zaheer Anwari here, co-founder of Sublime Trading. So Bobby, am I good to go? Have I got control of the platform now?
You are good to go. You are in control and you are presenting.
Fantastic. All right, brilliant. Hi guys. Okay, I can see an array of names in the chat box. So welcome guys. Really excited about doing this presentation for you guys because as you're probably aware, the National Stock Exchange of India has been performing exceptionally well since last year. And here at Sublime Trading, we have a growing community in India. And of course, Metastock has a wonderful community in India as well. So a very, very interesting time to be an Indian investor. Unfortunately, I'm based here in the UK. Unfortunately, I'm not able to get access to Indian stocks, which is a real shame. Because some of the stocks that we have found using Metastock for our Indian community members has been a real revelation for me. So what I'm going to go through today, guys, is a brief history of the Market Advantage Toolkit, a brief history of myself and how this whole thing came about. We'll then talk about our edge, which we call the 4PS method, and how that edge comes together with the Market Advantage Toolkit, Metastock. We'll go through some of the stocks in our portfolio. That's the National Stock Exchange of India, the stocks that are in our portfolio that we've shared with our community members, and then any questions that you may have at the end as well. I do have access to the chat box, guys, so do say hello to me. Let me know that you can hear me okay, that we are all good to go. If you have any questions, I will be picking them up as we go along. Okay, so just a brief history of myself and how the Market Advantage Toolkit came about. I started looking into investing and really trying to get more out of my hard-earned money. Now, what I was looking for at the time was a system that was simple to learn, simple to execute, and that adapted around my busy lifestyle. At the time, I was working a number of jobs. I was a photographer throughout the day. So my 9 to 5, if you like, I was a photographer. We were working in high-end advertising. So we had clients like Coca-Cola, Audi, Whirlpool, Harper's Bazaar, Vogue, Tatler, all the big editorials, big brands that we were working with. Our images went on the side of buses. I was working very, very long hours. Generally, photo shoots are not as fun as people may often think. Pre-production, the day of the shoot, post-production, days are very, very long. And then at the weekend and sometimes in the evening, I was also an English language teacher. So I was teaching Japanese businessmen here in London how to teach English, how to speak English, or to improve their English. So I was often working 6-7 days a week. I had very, very good money coming through, guys. Excellent money coming through. Some months were just, you know, large 5 figures amounts of money coming through from the advertising and the revenue that we were generating from our advertising. It was a very lucrative period in my time, in my life. What I wanted was a system that I could learn to adopt, that would help me leverage my money, to grow my money. But more importantly, I needed something that would fit around my lifestyle. So as you can imagine, day trading is not always the best approach because it's so difficult, the amount of time and commitment it needs. And ultimately, I also wanted something that was repeatable, something I could do day in, day out, week in, week out, year in, year out, and just stick with it. A challenge that you may find for the guys on here, one of the challenges that you may find is finding the right assets or stocks to invest in, which is often a big challenge. But secondly, having a system that is repeatable, one that you're comfortable and confident using all the time without chopping and changing. And that was key as well. So there was a lot of things I was looking for: simple to learn, simple to execute, adaptable around my lifestyle, and repeatable for life. These were the 4 criteria that I was looking for a system. As you can imagine, early 2000s, I could not find a system that met my requirements. They were either too complicated, value investing, for example, looking at formulas, etc. I just found it very, very complicated. Inconsistent, it doesn't really matter which strategy I was using. I just found everything inconsistent because I couldn't really stick with that system all the time. And also time consuming. So value investing, I found it very time consuming because of all the studying you have to do into businesses. Day trading was time consuming because it just involved a lot of screen time. And when I was working long hours, I had a boss. The last thing my boss wanted was me looking at a screen all the time, day trading. So nothing met the requirements that I was looking for. So I embarked on a massive learning curve and I created my own system. I learned to use the tech available, like scanners and charting software. And this is when I started learning about Metastock. I mean, Metastock has just got better and better and better over the years. So it's no surprise that it's an award-winning bit of kit. But it was really my tech software that came in useful. My software degree that came in useful around this time. I actually have a degree in software engineering, even though I worked in photography and I was an English language teacher. I actually have a degree in software engineering. I worked for 1 year for Oracle Corporation as a software engineer. And if I'm honest with you guys, I just absolutely hated it. I didn't like the 9-to-5 lifestyle. For me, a 9-to-5 lifestyle is fine if you enjoy what you're doing. I think that's really, really important. There's nothing wrong with working 9 to 5. There's nothing wrong with working jobs. You go online and you see the sort of modern day guru telling you, hey, don't work 9 to 5. Look, it's the world we live in. Jobs take time. They take a big chunk of your day. As I said, I was in photography. I wasn't working 9 to 5. I was often working 8 to 8, 6 to 6. I was working long, long hours. But I loved what I was doing. That was the most important thing. But I have a degree in software engineering, and that really came in useful when it came to learning the technology that was available and also creating my own bespoke charting tools, because I understood about JavaScript, I understood about a bit of HTML coding, etc., etc. So anything that was useful for creating tools, I had a bit of knowledge about it. So I ended up starting to create my own tools. And here's the key, guys. I started adopting the trend following principles in this book, Way of the Turtle by Curtis Faith. If you have not read this book, guys, I recommend ordering this book today and pushing it to the top of your reading list, because this was a game-changing book for me. Just to give you an overview, it's a true story. It happened in the early 80s. Two multi-millionaire traders, Richard Dennis and William Eckhart. Richard Dennis believed anyone could be a trader. Richard Dennis believed anyone could be a trader. William Eckhart, he was a bit more of a snob. He believed that you were born a trader. So it was this argument of nature versus nurture. So what they did was they put an advert in the Wall Street Journal. These guys were friends. They put an advert in the Wall Street Journal inviting novices to an experiment. What they did was they chose, I think it was like 20 people, and they taught them how to trade, complete novices. They taught them how to trade, how to trend follow in 2 weeks. Over the next 4 years, they turned over almost $200 million. This is a true story. It's a fascinating, fascinating story. What I liked about the book, which is something that you don't see a lot in books these days, is that A, you've got the results, which were proven results and verified results. Secondly, the strategy was at the back of the book. So I studied that strategy. I really got down into the nuts and bolts of the strategy. And what I did was I optimized that strategy for the modern market. Now, here's a table taken from another book there, Excess Returns, a comparative study of the methods of the world's greatest investors. Look at this table, guys. At the top of the table, you've got Richard Dennis, you've got William Eckhart, both the masterminds of the Turtle Trader Experiment, the book that I just went through. Note where Warren Buffett, Charlie Munger, and Benjamin Graham come. They're all mid-table. Yet, if you go online, all you ever see is Warren Buffett. Now, of course, Warren Buffett is a legend. He's a great man. Charlie Munger, Benjamin Graham, these guys have achieved wonders, particularly with the longevity. Warren Buffett's been investing for over 50 years. But his performance, his track record is mid-table, and a lot of his wealth is made through dividends. Whereas with Richard Dennis and trend following, the money and the wealth comes from actually picking good stocks, holding and compounding those stocks. And that's where a lot of people want to pay their attention in their working years. In the working years, it's all about growing your portfolio. And the best way to grow a portfolio is through compounding and holding trending positions. As you get older and move towards retirement and you have a much larger pot of money, then you may want to think about value investing, where dividends may play a bigger part of your portfolio because you're looking for cash flow. So in my early 20s, trend following, Way of the Turtle, Richard Dennis, that all was a revelation for me. And I went on this massive journey of understanding trend following, and that is how the strategy came about and how the market advantage toolkit and the relationship with Metastock came about. So what I did was I took the strategy at the back of Way of the Turtle and I optimized that strategy for modern market conditions. And I've never looked back. Today, I've developed a reputation online for putting trend following back on the map, because ultimately, guys, when I started this journey, I realized that trend following had become a forgotten art, and lesser strategies were commonplace. They were taking center stage online, and that, I mean, we could get all conspiracy theory about it. We could do, because ultimately, financial literacy is a pandemic that gets no media attention. There's no vaccine for this pandemic. The schooling system in India is no different to the schooling system here in the UK and the schooling system in America, in that we are not taught about financial literacy. We're not taught about how to manage our money. We're not taught about investing. What we're taught about is building careers. Go build a career, go work, go earn money. The schooling system is absolutely fantastic for that, but it's not good for financial literacy. So when you go online, it's very hard to understand what is good information, what isn't good information. And so what I realized that online, a lot of lesser strategies were getting a lot of attention, because ultimately people couldn't decipher between what is a good strategy and what isn't. But as I said, I read Way of the Turtle, I came across trend following, and that's when I started questioning and going down this route of figuring out how trend following worked. As of today, I'm blessed to be in a position where I'm able to share my message on a much larger platform. Of course, I have this wonderful platform with Metastock to be able to share my message. But I contribute to Benzinga. I've been invited to give talks internationally. So my message on trend following has been picked up by a number of industry-specific titans, really, these publications, big publications, investing.com, the IFTA. And it's been a real pleasure to be able to get trend following back on the map and to get people understanding the benefits of trend following beyond just value investing and day trading. I'm the co-founder of the Phoenix Academy. This is our primary education academy where we have actually a growing Indian community in the Phoenix Academy. We have CEOs, high salary earners, high net worth individuals, people who have cash that just want to have a better stock market portfolio. Because guys, ultimately, it doesn't matter whether you are a mid-table earner or a table-topping earner. It doesn't matter whichever category you fall in terms of the salary that you're earning. Generally, the idea of investing in stocks is the same, that people have big holes in their knowledge. Knowledge gaps are profound. So people are coming into the Phoenix Academy and we're helping filling these gaps and helping them to put a portfolio together. As of last year, the Reversy fund was incorporated in Luxembourg, and that's a hedge fund. So that's for people, that's a managed service. So people who don't want to learn, we have the fund management as well. And ultimately, in 2023, guys, we released our trend following system on Metastock, which we call the Market Advantage Toolkit. It took many months of hard work to put this all together, and it's an absolutely beautiful looking bit of kit, which I'm excited to be showing you guys today. So we've called it the Market Advantage Toolkit, also known as the MAT. And the MAT is designed for you to shortlist and invest in the best trending stocks outperforming the index. And that's a really key point here, outperforming the index. Now, just to give you a sort of background about how the Indian stock market came about for us, I did a presentation a couple of years back. Here in London, I focus on the UK market and the US market. Those are my two main stock markets, US market primarily, then the UK market as well. But I also look at commodities and foreign exchange. Those are the main markets. But US stocks really take center stage because of the size of the market. I did a presentation, and there was a gentleman in India who saw the presentation, absolutely loved the presentation I was doing, and he emailed me and he said, "Look, can you do this for the Indian market?" I looked into it, spoke to Metastock, and yes, absolutely. We have now converted this for the Indian stock market. So instead of using the S&P 500 as our primary indicator, we now, of course, look at the Nifty. And so the logic is the same. It doesn't matter whether you're looking at the US market or the Indian market, the logic is the same. We look at the index as our guide, and then what we're looking for are stocks that are outperforming the index. So just some comparative returns. Now, I've left it here for the S&P 500, but just change it for the Nifty. So what I mean by that is, imagine we have two portfolios. You've got $20,000 in a tracker fund. I'm assuming you have something like this in India where you can put money into the Nifty and just whatever the Nifty is doing, you get the returns of the Nifty's performance. We call it tracker funds here in the UK and the US. I'm assuming that you have something similar in India called a Nifty tracker fund. Let's say you put $20,000 into this Nifty tracker fund, and then also $20,000 into some of the stocks that you're going to find with the system that I'm going to show you today. Let's say you have a time horizon of 20 years, and let's say that you add an additional $100 to the pot every single month. Now, on average, let's say you are getting 11% a year growth on your tracker fund. But with individual stocks outperforming the index, we can push that performance to 30% and over. Now, remember, I've got a hedge fund, guys. And with a hedge fund, you've got to have a track record. And with that track record, it's got to be verified, it's got to be audited, and it's got to be confirmed for you to be able to have a hedge fund. So we've had our track record verified at around 30% per annum per year. So the difference, though, with this system, if you have $20,000 over 20 years, keep adding $100 a month to the pot, and then have an average annual return of 11%, you're looking at around $250,000. $250,000. That's a fairly decent return for not doing anything other than setting up a system and then holding and set and forget and being consistent over a 20-year period. Here's the thing. with a 30% return over that 30% per year return over that same period, you're looking at over $4.5 million of return. This is the difference between investing in an average, which is what a tracker fund is, which is what an index tracker fund is, or investing in stocks outperforming the index. The ROI over a consistent 20-year period is absolutely vast. So whatever I'm showing you today, it's definitely worth exploring and definitely worth giving some time and consideration to, because the rewards, well, I mean, the numbers speak for themselves. Now, the MAT finds stocks that follow what we call the 4PS method. This is the 4-phase sequence method. Now, over the years, there have been numerous ways of looking at waves in the market. Some of you guys will be familiar with, say, Elliott waves. Elliott waves is one of the original ways of counting waves so that you can know how far a stock could potentially move. We've got other tools like, for example, Fibonacci extension. You may throw in things like Ichimoku clouds. You've got GAN, for example. There have been numerous methods and tools that have been created to be able to count waves in the market. Personally, I think a lot of these techniques now are old, they're outdated, and we have evolved. Like all industries, everything evolves. Us as retail investors, they're private investors, we've evolved, we've got better, we've understood the markets better, we've got a better array of tools, we've got things like Metastock now that we can use to really understand what is happening in the market and make much better decisions. So I created a system that helps us identify stocks, very, very good trending stocks, which I called the 4PS method, the 4-phase sequence method. Excuse me. So what does this look like? Well, ultimately, the 4PS method is a stock that follows 4 waves. So you've got phase 1, 4 phases. Phase 1, which is a proven performance. So what I mean by that is a stock that has performed well in the past is very likely to perform well in the future. Microsoft, as an example, has a very good performance history. Nvidia has a very good performance history. These are stocks that have performed well in the past, very likely to perform well in the future. A stock that doesn't have a good performance history is Tesla, believe it or not. Tesla is extremely volatile. It swings in all directions. It's not a good stock. The company Tesla, you may love Elon Musk. And this is where the danger comes in. When you start getting emotionally attached to a stock or a company or a co-founder, you then end up making bad decisions when it comes to the actual investment of the stock. You have to remain objective. And this is the beauty of looking at charts. You can actually see what the stock is doing and then make good decisions. So phase 1, we want a stock that has a good performance history. Phase 2 is a consolidation base, a sideways market of 3 to 6 months, very minimum, ideally longer. There's an expression, guys, the longer the consolidation, the bigger the breakout, right? So the longer the sideways market, the bigger the trend that could potentially emerge. Now, something that fits this pattern very well is gold. Gold has a very good phase 1, 10 years from 2001 to 2011. It's now in phase 2 from 2011 to today. It's been in a 13, 14, 15-year consolidation. However, in the last few days, we've seen a good run in gold, but it still hasn't broken out and it still hasn't printed new all-time highs. And this is where phase 3 comes in. Phase 3 is when it breaks out and starts printing new all-time highs. We want to break out from consolidation. When stocks start breaking out from consolidation and printing new all-time highs, these are stocks or assets or commodities and currencies that move very, very, very quickly. And then phase 4 is that new trend. This is the phase that we want to get into. And these are the phases that we want to get into and typically last 12 to 18 months. And then we want to be able to manage these stocks, hold them, enter, hold, compound, and then manage with the trading stop loss and then exit when the trading stop loss is hit. All of this is programmed into the market advantage toolkit. So I'm just going to go through that again. Phase 1, proven performance. Phase 2, consolidation base, sideways market. Think of it as the roots of a tree. The longer, the thicker the roots, the taller, the bigger the tree. That's what you want to see as a consolidation base, a long base that can act as the foundation, the roots of the next trend, the next phase 3, the phase 4. Phase 3 is the breakout, and then phase 4 is where we want to enter and start taking positions. So the start of phase 4 is when stocks and assets display an edge. The start of phase 4 is when stocks and assets display an edge. I'm just going to go back to that. Phase 4 is that new trend. That's where we want to get in from phase 3 to phase 4, right at the base, right at the start of that phase 4. That's when we want to get in. And that is when stocks and assets display an edge. Now, what do I mean by an edge, guys? An edge, let's just explain this. An edge is a checklist system that you can apply to your charts. And if the stock meets that checklist criteria, then you have a high probability asset. That is what an edge is. An edge is ultimately being able to define stocks, commodities, currencies that have more chance of returning a profit than a loss. The easiest way to identify an edge is using technical analysis, looking at charts, looking at the higher time frames. Because I'm looking for the big moves in the markets, the stocks that last 12, 18, 24 months, maybe longer, I look at the higher time frames, the monthly, the weekly, and the daily, because I have the bigger picture. That way I'm doing less work. Remember, if you go back to the very beginning, I wanted a system that adapted around my lifestyle, where I wasn't glued to the screen. All the work is happening in the background. I can get on with my life. That is where the monthly, the weekly, and the daily charts really come into their own, because you're looking for the big moves with minimal screen time. So what I have is a number of indicators on the monthly, a number on the weekly, number of daily. When these indicators are met, I have an asset that is high probability phase 4, and I can start considering a position. Now, this criteria is all programmed into the Market Advantage Toolkit. It's all fully explained. There's complete transparency. This isn't a black box system. You are actually understanding what makes a good phase 4 stock. What is an edge? Now, here's the thing, guys. I always have conversations with people about what is an edge. An edge is when a stock has more chance of returning a profit than a loss. If you cannot define your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does. I'm going to say that again. If you cannot define your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does, right? That's really, really important. Now, we know the stats. Very, very few people actually make good money in the stock market. Very few people. And the reason for that is because most people lack an edge. Now, that's not because they don't have the ability to have an edge. They just haven't taken the time out to understand what an edge is. And hence why they have underperforming or poorly performing portfolios. We must have an edge. And we must be able to easily identify and explain what that edge is. So if someone comes to me and says, "Zaheer, what is your edge? What are you looking for?" I simply go back to what I was saying earlier, which is I have the 4PS method. The 4PS method is my edge, and I have a checklist that meets my criteria to define that edge. If that checklist is met, I take a position. If it isn't met, I stand aside. And that is how clinical we have to be as investors. We have to be able to identify an edge. Else, we will continuously lose money. And remember, this is a win-lose game. If we're losing money, someone's winning. Metastock and the Market Advantage Toolkit are your edge. The combination, this winning combination that we have created, put together, Metastock and Sublime Trading Market Advantage Toolkit, combine that together, and that is your edge. Now, how does the Market Advantage Toolkit work? What are we looking for? Well, there's 3 steps. Step 1, we want to be able to pinpoint when to invest for maximum ROI. We have to be able to pinpoint when to invest for maximum ROI. This is all about market conditions, understanding market conditions. This is where the Nifty comes in, and we're going to be covering the Nifty in a second. Step 2 is you've got to be able to identify top trending stocks to invest in for maximum ROI. Top trending stocks to invest in for maximum ROI. So this is where the scanning comes in, the explorers, and where the tools come in. That checklist system that I just shown you, that is where that comes in. And then step 3, you've got to be able to invest using a proven trend following strategy for maximum ROI. So this is strategy execution. You've got to be able to understand entry points, stop losses, risk management, compound levels, trailing stop losses, know when to enter, know when to exit, know when to stand aside. There is a strategy. Now, here's the thing. It's all very simple, but there is a level of sophistication to it that people tend to overlook. But I'm going to break it down for you as we proceed through today's session. So once again, Number one is understanding market conditions. We want to know the right environments to invest in. Once we've identified the right environments to invest in, step two is to understand the best assets to invest in. Now, remember, the stock market has various sectors. So the money flows between sectors. So that's where portfolio diversification and rebalancing comes in. It's really important. And step three is then investing using a strategy. And that's where entry points, stop losses, risk management, all of that good stuff comes in. So these are the three steps to putting a good portfolio together. Okay, so let's switch over to Metastock. I'm just going to make sure that you guys should be able to see my Metastock. Yep, fantastic. Okay, so my Metastock is now displaying. So I'm assuming that most people, if not everyone on here, has Metastock, and you are familiar in general with how to use Metastock. So I'm just going to give a brief overview of the main elements of Metastock and how I use it. So first and foremost, if I just close this down, the P in the top corner, that's your power console. That's where all the magic happens. So when we click on P and the power console, the power console will open. Now we go down to explore, which is the third button down on the left-hand side. And what you will see is a number of explorers that we have created for Metastock. Everything that says MAT, these are all the different explorers that we have created for Metastock. We have a set of pullback explorers. We have a set of pullback explorers. We have explorers to go long. We've got explorers to go short. And also we've got a set of explorers for large cap markets. And we've got a set of explorers for low to medium cap markets. So the US explorers can also, here you can see MAT, US explorers. All of these US explorers can be used for large cap markets. Anything that says UK, these can also be used for the NSE. So the UK explorers are also set for additional medium to low cap markets. So when I scan the NSE for our Indian community members, I use the UK explorers. In terms of the actual markets that I explore, you can see right here, if we go to equities, we go to the Asian market. If I open that up, I've got it already checked here. National Stock Exchange of India. So there's 2,642 stocks that I scan through every single day. Every single day at the close of the Indian session, I then go to the explorers and I scan the market to find some of the stocks that hopefully have met our criteria that I've explained in that checklist, that edge that we are looking for. Okay, now, once it's done, the scan, so if we just go back to report here, view all reports. The reason why I'm showing you this is because I recently did a scan. Where are we? I think I saved it over here. Bear with me 1 second. Yes, I did. So I did a scan earlier today. This section over here, you can see this scan, and we had 8 stocks picked up by the scanners, which is interesting because the Nifty actually broke out today and printed new all-time highs. So normally it's a much higher number. We get somewhere between 50, 60, 70 stocks, maybe 80 stocks, sometimes 100 stocks that are meeting our criteria. But today we only had 8 stocks picked up, which is fascinating. I may run the scan again just to make sure that it hasn't missed out any stocks. So I will run the scan again. But if that's correct, there were only 8 stocks picked up, which is fascinating. But first of all, before we get into some of these stocks, the first thing I'm going to do is I'm going to bring up the index. There we have it, right? So we're going to be looking at okay, just give me a second. Okay, perfect. We now have the Nifty in front of us. I've opened this up, and now we have the typical methods that I now do my analysis. I mentioned earlier that I look for the monthly, the weekly, and the daily to do my analysis. Well, look what we have here. We've got the monthly time frame in the top left. We've got the weekly time frame in the top right. We've got the daily time frame in the bottom left, and we've got another daily time frame in the bottom right. So the monthly, the weekly, and the daily in the bottom left, that's where I do my analysis. What I'm looking for are high probability stocks that meet that checklist. And then the daily in the bottom right, which we will cover in a second, that's where you will find the entry points, the stop losses, the trading stop losses, everything programmed into the daily in the bottom right. So the daily bottom right is your strategy execution page. So how do I use the Nifty? Well, very, very simple. If I open up the monthly time frame, here's the thing about the Nifty. The Nifty has been printing new all-time highs since June of last year. Since June of last year, the Nifty has been printing new all-time highs. Typically, the S&P 500 or the US stock market, that leads the way, and then all the other markets tend to follow. But since last year, the Nifty has been leading the way. The US market has only just broken out and printed new all-time highs. In January of this year, the S&P 500 broke out and printed new all-time highs. The Nifty actually broke out in June, as you guys are probably aware. So let's have a look at its structure. If we take it from this correction here, which is coronavirus, we had this big bull run to the upside for many, many months. So that's the low of March 2020. And then we had the high of October 2021. Massive bull run. Then we had this sideways market. So we had phase one, phase two is this sideways market. Phase three and phase four happened in June, July of last year, and we can see since then the Nifty has climbed by another, I think 21, 22, 23% now, that it's rallied to the upside. So once the Nifty starts breaking out and printing new all-time highs, stocks will absolutely start moving ahead, start shooting ahead very, very quickly. If we look at the weekly time frame, on the weekly, by the way, guys, I should say, if we just go back to the monthly time frame, let me just point this out. If we go into view and expert commentary, all our criteria, everything is all fully explained in the commentary for each bar. So you can see here, there's an upside down triangle explaining what is happening on the month of March. If you move across, if I click across, you'll see that triangle starts moving from arrow to arrow. As it moves from arrow to arrow, the commentary has been programmed with the exact criteria of why that asset is bullish or why it isn't bullish. In addition to that, you'll notice that there's a ribbon here at the bottom. And you'll see that the ribbon currently is displaying green bars, green ribbons. That means that the criteria is bullish. The Nifty is bullish. The Indian stock market as a whole is bullish. We should be looking for long opportunities. If we go to the weekly time frame, now, the weekly time frame has its own set of criteria, again, all fully explained in a detailed manual that comes with it, as well as in the expert commentary as well. Each time frame has its own commentary that gives you all the criteria, the settings, all fully explained. But more importantly, look at the bottom, guys. The ribbon is saying bullish. So the monthly is bullish and the weekly is bullish. That means we have what is known as alignment. The time frames are starting to move or are moving in the same direction. If the monthly is bullish and the weekly is bearish, that means something is disconnected. Either the market is reversing, which we will see first on the weekly time frame, or the market is pulling back. But ultimately, if the monthly is bullish and the weekly is bullish, then we have the market moving in the same direction. Also note that if we come down to the daily in the bottom left, the daily also has a bullish ribbon. So the daily time frame is also bullish, and we can see that with our trend filter. If you notice the color of the bars, they are predominantly green. We have a trend filter over the bars. We've got periods of green, we've got periods of gray, and we've got periods of red. So when the trend filter is green, which it has been green since November of last year, that means we are in a bullish phase 4 in the market. So what is that telling us? What it's telling us, which is of no surprise and something we already know, is that the Nifty is trending, it's performing very well, it's printing new all-time highs, and that is the direction that we want to be going in. So that's phase 1. Always keep an eye out on the Nifty. Look at what the Nifty is doing. If the Nifty is moving up, buy stocks. If the Nifty is moving sideways, apply patience. If the Nifty is reversing and heading to the downside, you may want to think about taking a profit, cutting out of positions, rebalancing the portfolio. The Nifty is a very, very good indicator. What you don't want to do is trade or invest in the Nifty, because ultimately you're investing in an average. And we've looked at it already. We've looked at what happens when you invest in an average. You get average performance. If we can find stocks outperforming the Nifty, then that is where the true money and the true wealth is made. So what I'm going to do now is I'm going to share with you some of the stocks that have been found through the explorers and through this 4-screen analysis method. So some of these stocks, hopefully you should know. Other stocks may be new to you. So one of the first stocks that we shared with our community members and that has performed very, very well is Action Construct. If you look at Action Construct, guys, this red line here is the low of last year. This red line is the low of last year. This green line is the high of last year. So if we look at price movement from the low of last year, from the low of 2023 to where it is now, that is a huge run to the upside that you're looking at. So it was around phase 4. The low of last year is typically where phase 4 started in last year. So this stock has been in phase 4. A lot of these Indian stocks have been in phase 4 since last year. So if you look at when it created the low of last year, it was around 300 rupees. Action Construct is now 1400 rupees. That's a massive ROI, a massive move to the upside, 300, 400%, massive, massive run. But let's have a look at the indicators. Monthly, the band is green. On the weekly, the band is green. Look at the band, guys. The band is green. It's been green going all the way back to September, actually, of 2022. So it's been in this huge run on the weekly time frame, bullish run. And then also, if you go down to the daily time frame, we can see that we have green bands as well. There will be periods where it goes into consolidation, but when the daily goes into consolidation, but the weekly is still bullish, then we don't need to worry about these sort of sideways periods. Remember, over summer months, the markets go quiet. There's a seasonal movement to stocks. So when the stocks go quiet, go sideways because volume has dropped off, people are on holiday, institutional traders have gone away, institutional money has dried up. All we need to do is apply patience. We've got stop losses in play, we've got risk management in play. We don't need to worry about these things. So that's really where the monthly and the weekly come into their own. As long as the monthly and the weekly remain bullish, we don't need to get too caught up on the movements, the swings on the daily time frame, as long as the overall direction is heading up. And then the beauty, once we've identified these stocks, that is where the daily in the bottom right comes in. So what I mean by that, well, first of all, I'm going to compress the chart just so that you can see a little bit more information. You'll notice that the bars turn blue. The bars will turn blue when the monthly, the weekly, and the daily are all aligned. So when all three timeframes are aligned, the daily in the bottom right also turns blue, saying this is now territory where you want to start considering taking positions. And with entries, and then what we have are these diamonds. The diamonds are basically telling you, are pinpointing entry points. It's saying to you, enter here, buy here, buy here, buy here, buy here. So each time you get a diamond, that's telling you where you can either enter for the first time, or what I mentioned earlier is you can start compounding, which is buying more of a winning asset. So compounding is that secret sauce. Just to give you guys an overview of what compounding is, let's say you buy this stock at 300 rupees. If it moves to 400 rupees, people tend to take profit because they panic and they think, right, this stock isn't going to go any higher, so they panic. What good investors do is they buy more at 400 rupees. Then when it goes to 500 rupees, they buy more at 500 rupees. They keep on adding more of that winning stock into their portfolio. So the returns grow exponentially. And so again, this is one of the secret sources. This is a secret source to wealth creation. You would have heard the expression, cut your losers short, let your winners run. This is a good example of how you do that. Let your winners run, hold, compound, and then you'll notice that underneath the stock, underneath the price of the stock, there's this red dotted line. That is your trailing stop loss. So you can see that when since this stock has turned blue, which is around this area here, it hasn't gone anywhere near this dotted line. So that means that this stock, if you entered, let's say, for example, at this first green dot, this first green diamond, if you entered a position here, that position would still be open today because it hasn't gone anywhere near your trailing stop loss. So you're looking at a trend or a phase 4 from March 2023 to March 2024. This is a 12-month run. And remember, in the diagram where I explained the 4 phases, I said typically a good trend can last 12 to 18 months. This is a good example. Now, with each diamond that appears on the screen, what you will also have are entry points, which is this green line here. So this diamond has its entry point produced. It has a stop loss, which is the red line here, and it has a target level or a compound level. So when the asset moves to this price here, you can then start considering compound positions. All of this is programmed into the charts. You also have a sub-chart indicator here at the bottom, which is telling you how good the breakout or the entry point is. If it's a good entry point, you'll have a green bar. If it's an average entry point, it'll give you a gray bar. If it's a poor bullish entry point, it'll give you a red bar. All the criteria, all of the logic is explained in the manual, but also if you go to view expert commentary, it's all explained in the commentary as well. Okay, so let's have a look at a couple more stocks that we have found. Another really good stock that you guys have found that I'm sure you guys are familiar with is HBL Power Systems. Now, I used to play a lot of cricket growing up. My roots are actually from India. My parents, my grandparents are from India. So I'm born here in London in the UK, but I used to play a lot of cricket growing up. I used to love cricket. Nowadays, I don't play so much cricket anymore, but I do still love watching cricket. My dad loves watching cricket. So, you know, whenever you have the big matches, India versus Pakistan, for example, my family love watching cricket. So, you know, it's a good opportunity for me to spend time with my dad and my granddad and my uncles. Now, what I like to do is keep an eye out on the advertising boards in the background to see if there's any companies that I recognize from the companies that we've been picking up through Metastock. HBL is one of those companies that I saw on the billboard in the last India-Pakistan match, I think, which was like a week ago or something. But guys, look at it. I mean, if you look at it from low of last year, it was around $85, $86. It's now trading at just under $500. A massive phase 4 to the upside. So this is from the low of last year, which was March 2023, to where we are now, March 2024. Massive run to the upside. Look at the settings: bullish on the monthly, bullish on the weekly, bullish on the daily. And then you can go into the daily in the bottom right, and that's where, of course, you will find all your settings, your entry points into the trend, your stop losses, your trailing stop loss, your compound levels. Note how this recent correction the market is going through. The trailing stop loss is here. The trailing stop loss is here. This is going through a little bit of a correction. So all we need to do is apply patience and wait to see if it drops any further. Okay, we can exit. But if it continues to climb and it breaks out from above this high, we can continue to hold and buy and add more positions. All of that is programmed into the MAT. Okay, we've got HBL Power System. This stock was one of the first stocks that we came across, which was Jindal Saw, I think it is. Sorry, bear with me a second. Yes, it is. There you go. Jindal Saw. I think you guys probably know better than me, right? Jindal, Jindal. I think that's a holding company, because there's quite a few of these different Jindals. There's Jindal Stainless, there's Jindal Saw. So I think maybe Jindal is a holding company, and then there's different branches within that. But Jindal Saw, if you look at where it was, low of last year, we were looking at roughly 100 rupees low of last year. If you look at where it is now, 460 rupees. If you look at the settings, bullish on the monthly, bullish on the weekly, the band there is bullish, and then on the daily as well, you got the bullish elements to it as well. If you go to the daily in the bottom left, if I just compress the chart, you can see that it's been, when it's blue, that's when it's trending. When the blue disappears, it's gone through sideways markets. But note how when it goes through the sideways markets, the trailing stop loss doesn't get hit. The trailing stop loss is very clever, guys, because it's based on the volatility of the asset. So every stock has its own personality, has its own volatility. So the trailing stop loss is created based on the volatility of the asset. So the more volatile the asset, the wider the stop losses and the trading stop losses. The less volatile, the tighter. So it's a very intuitive bit of a kit that we've created here, because it helps you to stay in even volatile assets for much longer periods of time. And that's one of the challenges that a lot of people face, is first of all picking the right stocks. You can see how the scanning does that all for you, and how the 4-screen setup helps you pick out the best stocks. But once you're actually in those stocks and entering those stocks and then managing those stocks and compounding stocks is the next challenge that people find. And then staying in those stocks for as long as possible is a massive challenge. That is all taken care of with the programming that we've created here, because this will allow you, as I said, to stay in even the most volatile stocks for 12, 18 months, maybe even longer. Okay, let's have a look at a couple of other stocks. Another good stock is Persistent. Excuse me, I should have had these added in a list. Persistent, another good stock that has performed very, very well. So if I just open up the monthly time frame, you can see that from the low of last year, it was just under 4,000 rupees. Now it's trading at over 8,000 rupees. So Jindal Saw has doubled since the low of last year. It's moved over 100%. But if you look at the criteria, bullish criteria on the monthly, bullish criteria there on the weekly, you can see it says they're bullish, and then on the daily as well, bullish. It's actually a very, very good looking stock, this one, in the way that it's moved. Very, very beautiful stock. And then if you go to the daily in the bottom right, if I compress it, you can see for yourself how well this stock has moved. If you look at the trading stop loss, the stock hasn't gone anywhere near the trading stop loss. You've got your entry point, your stop loss, your compound level, all clearly highlighted there on the chart. So each time you get a diamond, you can enter a new position and then maximize the potential of that trend. So remember, you don't need to have just one position. You want to have 2, 3, 4, 5 positions running along that trend. So you're exponentially growing your portfolio on these winning stocks. And look, guys, think about it. We've looked at ACE. We've looked at HBL Power Systems. We've looked at Jindal Saw. We've looked at Persistent. And we can now also look at one more. Let's have a look at Sonatar Software. Sonatar Software. There you go. Look at Sonatar Software, guys. Sonatar Software was around $300, 280 rupees, 300 rupees at the low of last year, and it's now trading at 800 odd rupees. So this is 2.5x, right? In that time, a massive move to the upside. Again, if you look at the criteria, monthly on the bullish on the monthly, bullish on the weekly, and then bullish elements on the daily. And then if you go to the daily in the bottom right, if I just compress that, you can see how the trend has performed. Look at it in relation to the trading stop loss, the red line underneath. This stock has performed very, very, very well. Also notice that you've got you've got green circles and you've got green diamonds. Green circles are entry points, but are low probability entry points. The diamonds are high probability entry points. Notice how the diamonds correlate with the blue bars. So again, the software is also adding filters to say, look, you could enter here, but it may not work. So it's actually giving you the difference between low and high probability entry points, which you can also use in relation to that subchart at the bottom. So if you had started, of course, hindsight's a beautiful thing. If you'd entered this stock on one of these circular entry points, you'd still be in today, which is the risk. You just have to weigh up the risk to reward. You may want to reduce your risk on the diamonds and increase your on the circles and increase your risk on the diamonds. So there's different methods that you can use. But crucially, the most important thing, first of all, is being able to identify these stocks in the first place. So let's say if you did enter when the bars turned blue, which was April of 2023, March, April of last year, you would still be in these positions 12 months later. It hasn't gone anywhere near the trailing stop loss. So this is a really good looking stock. Everything there for you as well. Simply take the values, put them into your broker account, the entry point, stop losses, compound levels, transfer it into your broker account. Typically, I don't risk more than 1% to 2% on each position, sometimes even less. And then I spread the portfolio, I spread that risk across many good stocks. So as I've said already, imagine if you had ACE, the Action Construct, if you had HBL Power Systems, if you had Jindal Saw, if you had Persistent, if you had Sonatar Software, you could even throw in Rec Limited, REC, you have TVS Motors, you've got ITC. I mean, there's just so many good stocks that we found. Let's say you have 5 to 10 of these stocks in your portfolio. You would have a phenomenal year. I'm talking 25, 30% potential returns over the next 12, 18, 24 months. And you could, if you repeatedly compound that, that's how you then generate wealth. It's that consistency that often lets people down. Okay, guys, I'm just conscious of time, so I am going to switch back over to my slides. Just give it a second. Yep, I think you can see my slides now. Okay, so your edge powered by Metastock and the Market Advantage Toolkit. So what do we do? Step one, we use the explorers to scan for the strongest stocks from the most robust sectors. So typically, as we said, we go through around 2,600 stocks. We scan those using the explorers, the breakout or the pullback explorers, depending on market conditions. That will give us a list of anywhere between 10 to 100 stocks, depending on how busy the markets are. On strong bullish days, we can expect bigger numbers. On low bullish days or bearish days, we will expect smaller numbers. Then we save that list and we open them up in the 4-screen system that I've just gone through. And we use the 4-screen system, that's the tools, the expert advisors, and the commentary, to shortlist the very best stocks. And usually I put them into tier A and tier B. So tier A are the ones that I invest in. All the ones that I've just shown you right now, they are all tier A stocks. But then you've got tier B stocks that are worth keeping an eye out on. You may never invest in them, but they're worth watching. Create a risk management framework. So typically I don't risk more than 2% per position. So often a lot less, 1%, 0.5%. Use the daily bottom right to place positions in your broker account. So that's where you find the entry points, the stop losses, the compound levels, the trading stop losses, all of that in the daily in the bottom right. So you can then execute your strategy and manage your positions. Place a set of positions into your portfolio. So, focus on, say, 10 stocks and manage those 10 stocks. And then when those 10 stocks no longer have risk and are returning profit, then add more stocks into the portfolio. Cut out of losers with a small loss. There will be losers, guys. There will be losers. There will be stocks that won't work out. But we don't lose more than 1% on those positions because we risk we won't lose more than 2% maximum, typically a lot less. But strategically hold and compound winners only scale in, only add to winning positions. And then use the trading stop loss in the daily bottom right to manage your position. So I've shown you how, if you time your entry correctly, wait for the monthly, weekly, daily to align, start taking your position, you can then use the trading stop loss to manage your positions. And then take profit and rebalance every 12 to 18 months. Let the trading stop losses guide you. Let the Nifty guide you as well. The Nifty starts reversing, then you can manage the positions in your portfolio. And then repeat the process. Stay objective. Don't get emotionally attached. As I said earlier, don't love Tesla just because of Elon Musk. Elon Musk doesn't love you, and the Tesla stock doesn't love you. Let's be real, guys. So don't love these people and these stocks for no reason other than, okay, you may want to admire them and you may want to appreciate what they have done. Elon Musk has done a lot for humanity, but stay objective when it comes to your own wealth and your own decisions and making the right stock investments. Okay, so the Market Advantage Toolkit, it's made up of 16 explorers, which you'll get access to. You've got 16 expert advisors, 11 bespoke indicators, 11 templates. You also get a detailed manual explaining everything, extremely detailed manual created by William, a long-term member at a long-term employee at Metastock. Wonderful individual, helped put this all together for us. It took about, I think it was like 6 or 7 months of hard work to put this all together. So very, very proud of it. And then there's a support structure from Sublime Trading and Metastock as well. We have a private community for Market Advantage Toolkit members. And of course, any help in terms of setup and getting the Market Advantage Toolkit, that is where Metastock comes in as well, the Metastock team. So guys, offer for you guys. This is a new add-on. We will be pricing it at some point this year at $199 a month. And over time, that will go up because, as you can see, this is a wonderful, wonderful bit of kit. There's over 30 years of experience that's gone into this. And I can tell you from the guys that we already have from our Indian community, this is already making a difference to their portfolio. So at some point this year, this will go up to $199 a month. Ignore the link at the bottom, guys. If you do want to get a hold of the Market Advantage Toolkit, it is $99 a month. If you get this today, or while it remains at $99 a month, you will have lifetime access at $99 a month. That means when we do start putting it up, you won't be subject to any price changes. If you take this, you lock it in, and it will be $99 a month for life. Okay, and there we have it. I will see if we have any questions, or if Bobby, if you want to come in and help us go through any questions.
Yeah, great job, Zaheer.
Thank you.
Looking over questions. I don't
Hey, Bobby.
see any that.
I'm sorry, I was
Yeah.
going to ask a question. What is the actual link to take us to Zaheer's offer? He mentioned not to use that one at the bottom, but I don't see the one we should use.
Oh, yeah. Could go to metastock.com/sublimex.
Okay. Also, really, since I've already interrupted, I wanted to apologize to Zaheer. Bobby and I were talking offline about what happened this morning, why we had kind of a false start, because Zaheer is usually very on time. Apparently, I sent an email out with the wrong time, Zaheer, so I apologize for that. It was corrected in a second email, but that may have been why you misunderstood the time this morning. So for that, I genuinely apologize.
No problem at all. No problem at all. That happens. The tech demons were at us today. It's all good.
Okay, I'll let y'all go. Thanks.
Thank you.
Yeah, I did want to bring that up, but I think we still got off to a relatively okay start, and we're finishing up here at a good time too. And yeah, Zaheer, I really think you did such a good job. You really covered all the points really well. And yes, regarding the questions, I think you've already answered all the ones that came in on YouTube, and we didn't have any in GoToWebinar. I think you had it on a slide earlier, but if people want to reach out with further questions, do you have a good contact, and we can share it in our chat with them?
Yes. You can email me at zaheer@sublimetrading.io. So my first name, ZAHEER, at sublimetrading.io.
All right, fantastic. And then maybe just to close things off here, I have something I could share really quick. All right, so I'm just going to take over for just a moment. Zaheer did such a good job really covering everything, but something I just like to quickly touch in on for people as well. If you guys are interested, in trying out his Market Advantage Toolkit in your market on the NSE or really anywhere in the world, and if you have any doubts or concerns about getting started, I just wanted to make sure you guys are fully aware that we have a full support team here at Metastock. It's our largest department. And not only will we help you to install and set up the software if you want it, but we'll give you guys a full hands-on one-on-one demo in the software, really just kind of showing you guys how everything works. And if you get the Market Advantage Toolkit during your trial on the really great $99 a month offer for that, we can even kind of help set that up, make sure all your charts are working properly with it, help make sure you understand kind of the ins and outs of how it all works. And that's all included for free at no additional charge for you guys. If you did need to get a trial of Metastock, you can sign up for that or at the metastock.com/sublimex as well, or to just, get a trial of the software. We also have a page for that too. For Metastock daily charts for the Asia Pacific region that would cover the NSE with end of day data, that would be just $59 a month for the software and data. And we'll give you guys 3 months access for the price of one on that as well. So really low entry cost here, guys. And you can sign up for that trial at metastock.com/sublime 3-for-1. Or if you wanted Metastock real time with intraday data, we have packages starting with the software and data both included at just $210 a month. And then after your trial, we have purchase options for the platform too that can help reduce your cost even further with that. And yeah, we do also have like a support team available as well, and a sales team too. So if you guys have questions about your specific account or anything like that, we're more than happy to answer your questions. I should state on Wednesdays specifically, so today, we do have a company meeting that's going on kind of in the background for like the next 15, 20 minutes here. So if our website, just has you leave like an email right now, but you wanted to talk to somebody live, just give it about 15, 20 minutes and then you'll have somebody in there if they're not monitoring it already. But yeah, I think that kind of covers everything. And
Bobby, there's a question. Sorry, Bobby, there's a question that come through. I'm not quite sure I understand. I don't know if you can see that question. It's in GoToMeeting. It's from Amit Shah.
Yeah, let me go ahead and make that dialogue bigger for myself here. Yeah, so he's saying, can you help show me how to find these stocks? When we explore the stocks, we receive multiple. So how do we find the right candidate? So it sounds like he's maybe using the Explorer and he's getting a list of like multiple securities and he's wondering how to select the best candidate out of that list of securities. And if you wanted to touch that on a little or show, I can send you back over as the presenter here.
Yeah, sure. Just the brief answer to that is basically what you would do is then go through the 4-screen setup. So you would save that list, go through the 4-screen setup, and then you would look at each stock individually and find the one that follows the 4PS method. So which one has a good phase 1, phase 2, phase 3, phase 4. Look at the indicators that we programmed into the Market Advantage Toolkit. Make sure it's bullish on the monthly, bullish on the weekly, bullish on the daily. So, look, Amit, it's a good question. What you've asked is basically where you have to train your eye to find these good stocks. There is a learning phase. There is an element of sophistication to it, but it's actually very straightforward. So start applying the 4PS method that I mentioned.
Yeah, I think that answers it really well.
Index trading system available. I don't know if that's is that for you, Bobby?
I'm wondering if the question is if you can use this on an index instead of just like an individual security.
You can use it on anything that has a chart. So you can use it on gold, you can use it on currency pairs, you can use it on anything. It's ticker neutral, if you like. But the heartbeat of looking at good stocks is that you're looking at stocks that are doing better than the index. So you can then push your performance or your ROI to a much larger return. But absolutely, you can apply this to the S&P or the FTSE or the Nifty or the DAX or whatever you're looking at.
All right. Checking. All right. Well, I think that covers it then.
Brilliant. Appreciate it, Bobby. Thank you. Thank you, everyone on here. Appreciate it.
We appreciate you. Thanks so much, Zaheer. And yeah, until next time.
Thank you. Take care. Bye-bye.
Bye for now.
Hi, Kelly Clement here from Metastock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us and keep on trading.